Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Let me give pause. The hardcover's $99.
Okay.
That's the way Peter Trubowitz rolls. He's at the London School of Economics, definitive at LBJ in Texas, and of course with the Phelan's Center at LSE. Peter, you're the first name I asked for. With all that we've seen this morning, where are we in a month? How does Mr. Putin respond to what we witnessed in the last 72 hours?
Tom, it's great to be with you. I can't believe they're charging $99 for that book, but in any event, I think Putin is a pretty happy camper right now, especially after everything that unfolded last week. And of course, in particular, following the fiasco in the Oval Office between Trump and Zelensky. I think what has been underscored here for anybody that didn't really realize it is that Donald Trump doesn't have Kiev's back, and that has thrown everything into, I don't know, like fast motion. I mean, what has happened in Europe, in London over the weekend has just been kind of head spinning as they try to figure out some kind of way to right the ship.
Okay, in your book, Geopolitics and Democracy, Oxford University Press, you have a perfect phrase for this moment that all of our listeners and viewers feel, and that is reaping the whirlwind. Can the traditional processes that Trubowitz has lectured on for decades, the Chatham House has talked about, CFR and all the rest, Peter, can reaping this whirlwind, can those traditional processes work, or do we need something new?
It's a great question, Tom. I mean, I would say right now, the standard kinds of checks and balances are not in place. So the most obvious one, when you think domestically, is Congress serving as a check on the president and so forth. To me, I think one of the most interesting parts of developments in the Trump administration, in Trump 2.0, is the way that his cabinet positions have been filled. He has essentially structured this in such a way that everything is coming out of the Oval Office and there is no opportunity for any check or blocking coalition to emerge among his cabinet officials. Where are his generals? There's nothing horizontal there. And I will say internationally, I mean, it seems to me with respect to the allies, he's just got them on the run. I mean, he is leveraging America's market and he is leveraging America's power to extract concessions. And what makes it very difficult, I think, from whether it's from, Canada to the UK to France to Germany, is they don't know where this will stop. And so there's no obvious kind of break there. The one place he's certain to get pushback is from Beijing.
So are you surprised, Peter, that there hasn't been any pushback from, say, Congress on some of these policy pronouncements or what happened in the Oval Office last week?
I'm disappointed. I'm not surprised, but I'm personally, when I look at this and think about it in terms of what's good for the United States over the long haul, over the horizon, I'm disappointed by it, but I'm not surprised. I'm not surprised for at least two reasons. One is Donald Trump owns the Republican Party, and they're just people that are too afraid of stepping out of line. And I think that for a lot of people, they think that the system that is the international system, can basically suffer a fair amount of, I don't know what you want to call it, like damage. So yeah, okay, so that he imposes tariffs and the tariff rates overall go up, the world won't come to an end. I mean, it seems to me that even, big names on Wall Street like Jamie Dimon have gotten themselves to that point so that they're prepared to see
Right.
some kind of slippage from the traditional rules-based order that Republican and
Right.
Democratic presidents alike agreed to.
Our conversation of the day with Peter Trubowitz. We continue. He's professor at the London School of Economics, barely defines his contribution to civics in America with his building of all the politics of the LBJ school at Texas as well. Paul?
So, Peter, we saw over the weekend UK Prime Minister Keir Starmer talk about forging a coalition of the willing to secure Ukraine. Is that even, talk to us about that. How do you think about that?
Well, it's a good question. I mean, it's possible, but if anything, it's anything but a given, I would say. And that's because any coalition that does emerge is likely to be a coalition of the unwilling, not rather than the willing. I mean, the crux of the problem here is that European leaders do not want to put boots on the ground as part of a peacekeeping force within Ukraine without a U.S. security backstop in the form of, aircraft, anti-missile batteries, intelligence data, satellite info. And Trump has basically thus far been unwilling to, at least publicly, commit to such a backstop. And I mean, the other news item that's getting no attention today is he's got a meeting with Marco Rubio and Hetzkoff, about
Right.
What the response is going to be. And it seems like, the choices are between canceling or suspending. That's the
Right.
positive
Okay,
outcome.
Peter, I got to interrupt here, and this is totally unfair to you, and not the way
Okay.
surveillance rolls. But everyone's thinking about it, whatever their politics. Should the Secretary of State resign?
So my view, and I've said this and I'm on the record, I believe he won't last very long. So, and that's because it's pretty clear. Anybody that was watching on Friday or watched the Saturday Night Live spoof of it realizes that Marco Rubio is very uncomfortable. He's basically
Right.
pivoting 180 degrees from things that he said about the war, Putin's war in Ukraine 2 years ago. And so the question is, can he carry the brief and, or not? To me, he seems like he's not a particularly relevant player in the administration.
Years ago, folks, you had to walk around campus. If you wanted to be a girl magnet, you had to walk around with a black and white cover book, Reagan's Legacy in a World Transformed. And young Trubowitz, Elliot Cohen's in the book, Paul Kenger, others.
Yeah.
Okay.
Young Trubowitz is in there, the balancer. Ronald Reagan, party politics, and U.S. grand strategy. You're in a classroom right now, and that smart aleck Paul Sweeney's in the back row, half asleep. And he raises his hand, Professor, and he says, what's after Trump? Do you see a permanence to this Republican effort of the President of the United States, or do you look at Donald Trump as a one-off?
I think the answer here is that it's possible. Look, the United States is very divided. We all know that. And not everybody agrees with this. If you look at the polling and so forth, the country is divided on so many of these questions. So it's quite possible that 2 years from now, Trump, the Republicans lose the Congress, everything grinds to a halt, and a Democrat comes back in 4 years from now and tries to change things. But imagine this from the standpoint, this is the kind of thing I hear over here. As an American, talking to Europeans and so forth, what kind of credibility? I mean, if this can happen, if it can happen, if it can happen under Donald Trump, it can happen at this point, and it happened 4 years ago, it could happen again. And I think these things have a kind of, they're sticky, and it's hard to just turn things back. So I think what is happening is, we're seeing parts of the rules-based order that has been in place more or less for 80 years. It's fraying, it's unraveling, and we're going to head into different territory, it seems to me.
Peter, you're a professor of international relations at the London School of Economics. You're an American in London. How do our European allies, who have been our allies since World War II, how do they perceive what's going on now? How concerned are they that 80 years of, I guess, relations and policy and strategy seem to be, kind of at risk here?
Yeah, they're freaked out. I mean, look, they have a war on their doorstep. This is not the first time. Let me just say, too, this is not the first time that an American president has put, if you will, the screws to Europe over security. Richard Nixon tried to shake down America's allies back in the 1970s. Tom, you'll remember this, when he threatened to slash the American troop presence there if they didn't start spending more on defense. But the difference between then and today is there wasn't an active war on Europe's doorstep. So this really has their attention. But the question, Europe the EU does not make a decision on a dime and turn on a dime. And they have trouble they've had trouble always coming up with a coherent foreign policy, a security policy.
I remember the day
it's not obvious that they're going to get there.
I remember the day de Gaulle wouldn't let American jets fly over France on their way to somewhere to bomb somebody. One final question, Professor Trubowitz, a good friend of the show, Robert Hormats, with all of his public service, wrote a book umpteen years ago, The Price of Liberty, Paying for America's Wars. Hormat's grand theory out of Tufts is simple. If your fiscal house is in order, you can't get it done. Russia's fiscal house is not in order. Europe's fiscal house is not in order. Decidedly, America's fiscal house is not in order. How does that play out?
I think the U.S. has much more running room than the other two that you mentioned. And so, the implication of what you're saying is that each of these countries has an incentive to retrench. The problem here is Putin, if he sees the United States pulling back in Europe, that's exactly what he wants. He wants to be able to divide Europe from the United States. This did not start with Putin. This was the old Soviet strategy as well. It had been Russian policy for a very long time. So he will double down if he sees that goal in sight, deficit or no deficit, I think.
Thank you so much for the time. Peter Trubowitz at LSE, just definitive with an American political thought. Thinking forward, the new effort, I can't say enough about it, 200-some pages, Geopolitics and Democracy from Trubowitz out of Oxford. Thank you so much this morning.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Joining us now, Jack Devine with us. He's founder of the Arkin Group. And as we had the other day with Mick Malloy, this is people that actually know what they're talking about. Jack Devine, thank you so much. With your work at the Central Intelligence Agency, if I as a hack say, do we have intelligence about what the Kremlin's thinking? Discuss that. Do we know what's going on? Do we know what's going on in Moscow? Or do we know what's going on in Beijing?
You always ask me tough questions. I hope so is the first answer. I think the key word in your question is thinking. In other words, I think the intelligence community knows where the armies are positioned and the battlefield strategy and the latest weapons. Thinking has always been the toughest the toughest nut to crack. And sometimes we've been extraordinarily good at knowing what's going on and other times not so well. So I'm hopeful that we are keeping up with the tradition, but I'm not betting on it.
Hey, Jack, what did you make, with a little bit of hindsight here, what do you make of what happened in the White House with President Zelensky and President Trump and Vice President Vance last week?
I think a lot of pundits have been covering this and from various angles. I mean, I think if I stood back, I would say, first of all, this is a moment in time. This is not the end game, right? Everyone's focused on the pieces here. And at some point, I'd like to go beyond that. But I think this is a question of people coming to the table not having primed the pump sufficiently to have the right type of discussion. And I think Zelensky was arriving at the table with a list, his wish list, right? And Putin sitting over in Moscow with a wish list. What they're not getting is the negotiations haven't really quite started. That starts when everybody agrees that they're going to be negotiations. So I think they jumped the gun here. And I think there was a lot of grievances and build up anxiety in the room across a broad spectrum. Obviously, it wasn't the best start, but I think we're going to move quickly beyond that because there's inevitability about where we end up, in my view.
Jack, we've all kind of grown up here in this post-World War II environment where there's a certain set of relationships and policies. Is President Trump fundamentally changing those long-held positions by the East and the West?
What we're looking at in the Trump administration is not a minor shift. I mean, I think every aspect of modern life and relationships is being put to a test, right? And the question is, do we come out of it better at the end? But the one thing I'm absolutely convinced of is that we're really entering the century now. This is really the beginning of the 21st century. I think President Trump is the engine of major changes and relationships and evaluations. And so I think everything is on the table. And I think people are saying it. Sometimes we don't listen well, but the administration, everything's on the table. So I think when the deck is reshuffled, however, let me just say that, I think our alliances, our enemy are our enemies. But how you handle it and where you go is a process of being worked out. And in the process, when you have that type of change, there's pain.
I look, Jack Devine, at people at risk here. And part of the risk is the cinema of Tom Hanks and the idea of a Berlin Wall or some form of divide and iron curtain, as we know from our youth. And the answer is, are we redeveloping with an isolationist America some form of new iron curtain?
I don't think that's the thrust. I think people are misreading what I think is happening. I think what we're looking at here is a negotiation to bring a war to an end where both parties really need to do that. I've been saying on your show for a couple of years, once you get the stalemate, the cessation of firing, and then you get the some deal. Too many people are thinking that Putin is holding really strong cards. He has nuclear weapons, but the prospect of him using it are very, very remote. The war is not going well for every party. So how is it going to be reshuffled? And I think part of it will mean actually a lessening of friction if the art of the deal is executed as I think it may be.
We're out of time. We got to get Jack Devine on again. Thank you so much. Really, really appreciate it with the Arkin Group. Just love having him on. I got about 8 more questions, but we can't do it.
Yeah, he's seen it all, Tom. So
We'll have Jack Devine with his work at the CIA on. Again, just incredible experience.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Joining us now, Lori Calvasina. Paul, you had a coronary this morning. You had a total Bart Simpson meltdown.
I know.
We have to have Calvasina on. Why don't you bring her in after it was before I'd had my first tang, and you were going nuts. We have to have Calvasina.
And we got her.
Bring her in.
How good is that? From the lawn at Charlottesville, Virginia, Lori Calvasina, head of U.S. equity strategy at RBC Capital Markets. Lori, we had a little bit of a drawdown, as Tom would say. I kind of called it a sell-off back in the day, but the kids called it a drawdown. 3, 4, 5% over, the first part of the year. What did you make of that? And kind of how do you feel about just the market levels right here?
Sure. So thanks for having me on as always. And look, this has been a big point of discussion over the last few weeks. Our view has been that the market's overdue for a 5 to 10% drawdown from peak. And that is, I know that sounds scary, right? But we have done a whole bunch of those since 2022. And that's pretty much what a garden variety pullback has been in the post 2022 era. If you think about sort of at our lows last week, we weren't even quite down 5%. And I was joking, when I was talking to investors last week, the dip that we had felt a whole lot worse than it was in terms of the price action. We've started to see anxiety come back. I think tariffs, we're finally starting to see people question the idea of whether or not they're actually a negotiation tactic. That was a big shift last week, and that helped push us to that kind of 4% plus ish drawdown level. But look, our base case has been that we could get to 6,600 on the S&P at the end of the year with at least one of those 5 to 10% drawdowns. We never thought it was going to be an easy path. But I will tell you, Paul, as we've been talking to investors about if that doesn't hold, what's next? We do think the risks of a growth scare, a 14 to 20% drawdown, similar to what we saw in 2010, 2011, 2015, 16, and 2018, when markets were fearful of a recession or a systemic issue that didn't end up quite happening. We sort of got the fear, but we didn't get the event.
Yep.
We think those risks are starting to grow. It's not in my base case, but if we're being intellectually honest with people, we think the risk of something worse than a 10% drawdown is starting to move up a little.
I mean, folks out there, if you ever get an opportunity to get a meeting with Lori Calvasina, take it. Because some really, really good stuff. I'm looking at your chart book here. Lots of good pictures. I like pictures because they help me understand things. But I kind of feel like earnings are as important as they've been for an equity market as they've been for a long time, because I don't think the Federal Reserve, Lori, is going to do a lot for me this year. How do you feel about earnings?
I'm the same way, Paul. I don't think we're going to get multiple expansion. I do think that the earnings growth outlook makes sense based on the information we have at the moment, but things could change. And I will tell you, as we've gone through and looked at what companies are saying about tariffs in particular, they really didn't start to have detailed discussions until after February 1st, the first deadline on Mexico and Canada that passed. And if you look at what companies have said since then, some of them are starting to bake some tariff impacts into their guidance, but others are saying, even some that have acknowledged it would be a significant hit to them, haven't baked it into the numbers yet either. So we're sitting at 271. That's a healthy growth rate, but we do see some pressures on that starting to emerge. And you've seen the earnings expectations on the bottom up consensus drift lower a few bucks as this reporting season has gone on.
On our morning commute, Lori Calvasina, RBC Capital Markets on YouTube. Subscribe to Bloomberg Podcast. Dazzled by the international reach there. Thank you so much. Across the evening Pacific Rim, the afternoon Europe, for your attention to Bloomberg Surveillance and to Lori Calvasina. Lori, if I say to you, we're in a bull market, and I say to you, corporations adapt, how will they adapt forward given the political noise?
Well, it's an interesting question, Tom, because we haven't really seen a big spate of downward guidance or upward guidance. I don't think companies know where to put the bar right now. And, we sort of looked as we went through one week to the next in reporting season. It started out very optimistic, and that optimism really started to get eclipsed by uncertainty. And I wouldn't say there's pessimism among corporates. The Conference Board CEO survey certainly told us they're still feeling better than they were last fall. We don't really know from that survey how they compare now versus January. But, one thing that came to mind as we were talking to investors last week was going back to that 2015, 2016 industrial recession, where we had resilient consumers, and then we had more pessimism in the corporate sector, especially that industrial and energy part of the economy. And it was just sort of an asynchronous business cycle. We had a bit of a market, pullback, but we didn't really ever come close, to kind of the recession capital R territory. And so as we've watched some of these consumer sentiment surveys slide, and we've seen the contrast with the CEO levels of confidence that have stayed much more resilient, one point of conversation came up, well, maybe we're going to do something like the flip of that, right? Where we have some consumer pressure, but the corporate sector stays resilient. I'm not saying that's where we're headed necessarily, but it's one, kind of idea and thought that started to emerge.
Lori, I know when I'm just going through your slide deck and wow, 150 pages. I'm on page 4. Refreshing
I'm sorry. It gets too long.
Francis Donald does not do 150-page decks.
Yeah.
It's like a 6-page special.
I'm plowing through it. You have a year-end 2025 S&P 500 bear case of 5,775. What would get you there? What would push it down?
So we put that out back in November, and we have refreshed the math around that. And there are a couple ways that we could get there. One of them is not really worrisome to me right now. We have done some modeling on our valuation work. If we got 10-year Treasury yields up to 5%, a big move up in inflation, that, when we did the math on that, right, that could have gotten us down to sort of the 5,600-ish type mark, which pulled that bear case down. Our sentiment work, frankly, sentiment's so bad, it's starting to be a good setup on a 12-month forward basis. That would have pulled the number up a little bit. But the other thing, putting the 10-year yield issue aside, because we're taking the message, right, that the Treasury is really focused on keeping 10-year yields lower. I think you have to look at economic growth. And this was one of the things we really focused on in our year ahead outlook was 2% GDP at the time was forecast for this year. That's now up to 2.3. 2 to 3, a very, very healthy environment for the stock market. It typically goes up. You have strong gains, in kind of the low teens, 10%-ish type numbers. But if you slip into a 1 to 2% GDP environment, stocks are usually down more often than they're up. And we have on average about a 3% decline in the market in those kinds of years. So we worry that some of these economic headwinds could potentially start to push GDP expectations down. Not a recession, but something like 1.5% GDP. And I think Francis's number, by the way, is 1.9. It could push you into a troublesome territory. Markets do not like sluggish growth. So that's one way you could easily get there.
What do companies do given this strange thing, sluggish growth? Does M&A pick up among the Russell 2000?
Well, look, I think we're seeing a slow start to M&A this year, and a lot of people are scratching their heads as to why that would happen.
Thank you.
I think if you look at the CEO confidence survey again from the conference board, they also showed that employment expectations came in just a little bit. So I think as economic, sort of concerns emerge, everyone's asked about CapEx. We haven't seen any shift in CapEx expectations in the survey data, but you have seen a little bit of ratcheting down on employment expectations, even given what we've had so far. And you've also seen that sluggish start to M&A. We have a good chart. I forget what page it's on in the deck, but it shows you that M&A over time does tend to track CEO confidence. I can't remember where any of the pages are. I'm not going to lie.
Francis Donald has a 6-page deck. Okay, Russell 2000, I'm down 13% in the vicinity of December 15th. Lori, I'm down 14% on Russell 2000, 40% annualized, and I've strapped 2 standard deviations plus all the way down negative 2 standard deviations. Is the Russell 2000 in a bear market?
So the Russell has been under pressure for so long, and we've had nothing but sort of short-term trades in, and then the momentum fizzles out. It's really been jerked around by hedge fund trading and passive investments in the last year and a half, and we've seen hedge funds in particular dialing up their optimism on the small caps when Fed dovishness was picking up, and when Fed hawkishness was coming back, they would dial down. And then we got to the election, and they started getting dialed up on election optimism. I think the problem you've got for small caps right now is that you have had some valuation problems. You've had some frothiness. If you look at the positioning data from CFTC, we are starting to see the valuation data unwind. We've gotten down to average on the long-term PE for the Russell 2000. That often can mark the bottom, but if you have a real economic problem on your hand, you'll go to 11, 13 times or 15 times right now. We had been up almost close to 19. If you look at positioning, we've got a lot more room to fall. And in the meantime, we've got a lot of economic headwinds that are coming at this space. And you need economic tailwinds to come back, or at least a recession priced in to really want to buy this space. So I think it's, interesting stuff happening here, but it still feels a little early to me.
And the magic of Bloomberg surveillance, folks, while Lori's talking, I'm going to page 106 of her stack. And I'm doing Russell 2000 log linear standard deviation from the depths of 2009. And she beautifully describes we're only down 1 standard deviation on the long-term log chart. We got a ways to go to get down to the angst of 2 standard deviations.
Okay. So, Lori, what do we do here? We're pretty much through the earnings. We're going to get some retailers this week. But what did you learn from this earnings cycle here, and maybe some of the guidance?
So I'll tell you the sector, and maybe it's on my mind because RBC has a conference coming up on this tomorrow. But I still like the financial sector in here. So I'm going to be, really interested to hear what those companies have to say the next couple days. But look, as we did go through reporting season, one thing that became very clear to me was that financials, they've got some tailwinds in terms of the policy backdrop from deregulation, and so the companies have absolutely been talking about that. But they're not really exposed, at least directly, to a lot of the headwinds that might potentially be coming. So, tariff impacts, it impacts the economy, right? So it will end up here as well, but they're not on the front lines of this debate. We've still got some good valuations, especially in the smaller cap financial sector, especially with the banks. I would say the investment banks where the M&A optimism is overdone, those look pricey. We're not really buying those. But we do think kind of the plain vanilla, sort of regional banks and SMID banks look pretty good in here. And they also don't have dollar pressure. They don't get caught up in where the currency is headed. So we still like that space. And of course, Gerard is still very bullish there.
Lori, very quickly here, a great observation out on YouTube. Thank you for the live chat brilliance. Lori, the Russell 2000 has a lot of stocks that don't make money. How do we address that? The lack of profit down the income statement of so many of those 2000 stocks.
The simple answer, Tom, and nobody likes this answer, but you buy an actively managed small cap fund as opposed to the ETF. And when I talk to active managers in the small cap space, and I've been covering this space since 2007, I know a lot of these folks very, very well, they don't tend to traffic in the unprofitable names. They tend to move up the quality curve. They really do have sort of a nose for finding the good companies. And I think that's really how you combat it, right? Is you just have to have individuals going in and picking the better companies within verticals, within industries, within sectors, because there is a lot of illiquidity. There are a lot of companies with loss makers, and there are goofy, sort of industry exposures, lots of REITs, lots of biotech, lots of unprofitable tech. An active manager can help you navigate around that.
Lori, thank you so much. Greatly appreciated this morning. What do you got, Paul?
Tom, Lori Calvasina, a resident of the Lawn at the University of Virginia, that is reserved for the most, I think, some of the more accomplished students there. You have to be a senior, that type of thing. There's only 54 single rooms on the Lawn. Each room is furnished with a lofted bed, a ladder above a day bed with a cover, a secretary desk with a chair, a hutch containing a refrigerator and freezer, and a microwave, a built-in closet, sink closet, and a rocking chair. How about that?
I gave a speech there one day, and I sat not in the early morning mist, but pretty close, like 90. Everybody's asleep. Calvasina was passed out. But it has to be the most spectacularly gorgeous piece of collegiate real estate in America.
Yep, my good buddy from high school, Robbie Stewart, he had a room on the Lawn there at his senior UVA. It's really, really a special place. And if you get a room on the Lawn, that means you're accomplishing something.
Closest I got to the Lawn was at the Rochester Institute of Technology, where there's winter and the 4th of July. The closest was to walk across the quarter mile where it was 22 below zero. That was as close as we got to the romance of the Lawn.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Your Oscar report, the daily front pages. Okay, Lisa, Ariana shows up in a Schiaparelli.
Oh, she was
it
so
should
cute.
go right to the Costume Institute at the Met. It just deserves to be in the basement. It was like completely not modern, is how I'd put it.
No, I love. She looked like a little princess, like on the red carpet. Like it's like when you open that jewelry box and the little ballerina pops up and spins around. She looked like that.
Schiaparelli, it wasn't poofy. It wasn't cheap. It was just.
No, it was beautiful. I loved it.
I'm thrilled that you wore it today to work.
Yes, of course.
What do you got?
All right, I'm gonna kind of pull an audible here. I was going to do the story about the montage and the people that were kind of left out of actors who died, because you had Michelle Trachtenberg, Shannon Doherty.
Surveillance audio.
Yes,
Audible.
yes. Surveillance audible. I'm going to go to this Lucas Shaw piece because I just find it so interesting about, Disney being the host of it for like 50 years for the Oscars. But now you see that starting to change because he has this article in Screen Time. You have to check it out about possibly them talking with Netflix, maybe, of being the next partner. Because last year, they were reopening that deal. It was worth more than $100 million a year. But that negotiating window between the two sides, it's open. So now they have these talks going on. So I thought this was really interesting about how Netflix could be, because then you think about streaming and how streaming is going to a lot of more live events. So if this is going to be like another way for them, if that's what they need.
That's where the world's going. So,
Yeah.
I mean, you got to see some of these big ticket items. And again, the next one of the next big things in addition to these, broadcasts like the Oscars is, live sports, the NFL and things like that.
But the thing I noticed last night, Mrs. Keene brought this up, addicted to all this idiocy, like Lisa, is Paul, streaming is completely taking over.
Yes.
I mean, this year they didn't have Oppenheimer and Barbie.
Right.
Period.
Right. I mean, you just look where the programming budgets are going from some of the big companies, like a Walt Disney company. They're all going to their streaming services. What do you see on your network television? You see a lot of, just not a lot of scripted drama. They're just not allocating the budgets, so they're putting all their money in streaming.
Is streaming a movie?
Yeah, sure, absolutely. We can do that.
Okay.
So why not? That's
Next,
where everybody's going.
What do you got?
Yeah, and it was also talking about how like the box office numbers for all the Best Picture nominees was like 40% lower than last year.
Yeah, I don't know what
compared.
they're
A lot
doing.
of
That's
people
just
haven't
the
seen-
Academy.
haven't seen- Yes.
41 million worldwide.
Please.
Yeah,
It's silly.
I haven't even heard of it. So that's going to be on my list. Okay.
Yep.
Let's move on. The gift bags. Okay, that's what I want to talk about, because a lot of the
Merch.
nominees
Yes.
who didn't take home the Oscar, they did not go home empty-handed. They were carrying along a $216,000 bag. with them,
Are you
okay?
serious?
They were gift bags from distinctive assets, mostly experiences that kind of make up the value. So you have like liposuction from Art Lipo
Nice.
for $25,000. Okay, 5 nights at a Sri Lankan wellness retreat for about $8,500. 4 nights at Jawali Maldives and Jawali Being for $23,000.
Wait. They get a coupon to Jollibee?
Is that what it is? I don't know how to pronounce these fancy
They
things.
get a coupon to Jollibee over in Astoria?
No.
Well, quickly here. Give me one
stuff.
more merch item.
Okay, one more merch item. Oh, did you know a 3-month top-tier Ancestry DNA membership is $25,000?
Really?
Yes.
Wow.
That was in there too.
Just
I had
to
no
tell me
idea.
all my
Beauty
ancestors came
products.
from Ireland.
Yes,
Great,
they have
thank
all
you.
the beauty products and all that kind of
Most
stuff.
for sober, right?
Yes, exactly.
Lisa, thank you so much. Lisa Matteo there. We're in Schiaparelli this morning with your Oscar summary. We'll do some more newspapers tomorrow. Hugely popular.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.